Hey everyone, it's Evan here from the Trade Risk on Friday, December 8th, here with a weekend market recap video. We're going to cover all the major markets, the current market environment, and then finish off looking at some sector analysis. Specifically in today's video, we're going to be discussing stocks as a whole are stabilizing into the end of the week. We had commodities break lower basically across the board this week, and we also had biotech, that's the XBI and IBB ETFs, closing back up at 1-month highs. We'll talk about all of this and some more right now. All right, so we'll kick things off here with the S&P 500, the SPY ETF. And you can see we finished on Friday about $1.41 higher. That's about 0.5% to the upside here in the S&P 500, the SPY ETF. So a nice finish to the week. Let's go to that weekly chart though first. We're going to look at the weekly candle chart here just because it gives us that broader perspective to start off with. You can see we finished up $1, 39 basis points to the upside. We didn't quite close above last week's highs, but we did make some progress to the upside, and we did close well off of the lows of this week. We had a rough start to this week, Monday and Tuesday. Sellers a bit in control there, kind of driving us lower, but we did find some stabilization midweek and sort of popped higher into Friday, which gives us this type of looking candle here. We can see that looking at this weekly chart, the trend of course remains incredibly strong here. We're still at the upper echelon of this trend. Momentum still building here, moving averages sharply rising and expanding away from each other, the blue and yellow lines you see on my chart. So from a long-term, intermediate to long-term, multi-month perspective, the trend here in the S&P 500 certainly still looks strong. Now, if we go down to the daily chart here, the beginning of this week I think was, potentially a little tricky or got people to, really sort of think about their time frame. And we had our Tuesday midweek video update on Tuesday, sort of reflecting on this market, and we talked about really the emphasis of that video was knowing your time frame and whether or not you were acting in this in this Monday sort of gap up failure and close on the lows. And we're sort of discussing, who should be acting on that and what kind of thoughts we should have kind of going forward. So I'll sort of reiterate a little bit on that, but basically, with Monday being the very loud session that the Senate passed the tax bill, kicked it through the door, approved it over the weekend, markets started with a nice kind of exuberant gap higher. That failed. We couldn't make any progress. We closed on the lows, and Tuesday we saw follow through lower. Now, whether or not you were acting on this as of either shorting the market outright, reducing exposure, I think really comes down to time frame and strategy. If you're very nimble, again, this is a very actionable sort of classic short-term exhaustion signal to the upside. Couldn't make any progress, failed, closed on the lows. It's a good point to risk-adjusted point to get short and take a shot or hedge yourself up if that's something that you're interested in doing. That did play itself out for basically about 2 days until Thursday, where we had this kind of turnaround here right at the 8-period moving average, and we started to pop higher into the end of the week. Now the volume was, was pretty much on average. We're starting to get into the end of the year, so we should expect volume to start to lighten up here, but the trend remains and is acting very healthy in this fashion. In fact, that we're holding at the blue line on my chart, which is the 8-period EMA, which is a sign of strength when the market can hold above there. And basically last week on Tuesday's video, we mentioned a couple of levels to pay attention to, and that was first 261. These were the lows here from Friday on this very wide range day, and then we said let's keep an eye on 259. If the sellers continue to get aggressive here, as we talked about on Tuesday, those were the points where we wanted to really pay attention. And as you can see here, we stabilized well above that onto Wednesday and Thursday and started to pop higher into the end of the week. So we're not out of the woods yet. We noted a few different things going on here. The range expansion in these candles, in these daily candle ranges here, they look a lot larger than, basically going all the way back through this chart here for the past couple of months. And that was something to be aware of. And the uptick in volume, of course, is never a good sign. So we had a few different things we were paying attention to and saying, look, If you want to reduce that exposure, depending on your time frame, that's something that you have to think about. But really, for the intermediate term traders, we'd want to see us start breaking some more meaningful support, either below, say, a 20-period moving average, or again, this 259, 261 level. That would be actual violation of support, not just a bit of a pullback here. So what we're looking at going forward now is, because we have started the rebound and now we have this slight kind of higher low that we can look at that we put in basically on Wednesday's session here, we want to see if the market next week can get back up and challenge these highs. Can we retest this point at which the market failed to move higher, this sort of exhaustion gap higher here? Can we retest that, and can we take it out? Can we close above this level? And if we do get a close above that level, then it certainly indicates the green light is back on, the trend is up, and we're starting to break to new highs. If we come up here and fail again, do we have some type of double top scenario, which again pulls us back and maybe starts to carve out a longer, maybe sideways consolidation? That's certainly a possibility. Or is this the top, and do we start to roll over next week and put in a lower high? These are sort of the scenarios and and sort of the outlooks that we can pay attention to come trading on Monday and Tuesday, and that's something that will start to dictate the mood of next week's action altogether. So those are sort of the levels I'm paying attention to in the very, very short term. Again, I'm watching basically the prior all-time highs there, and then basically the lows from Wednesday, followed by the lows from Friday, and then the breakout bar from back here in mid-November. Those would be the levels I'd be paying attention to on the S&P 500, but as it stands right now, this market is still behaving sort of as expected in an uptrend. We got a little bit of a pullback here. Sellers didn't materialize it into a bigger pullback. We've stabilized, and again, all these longer term moving averages are still up and to the right, so this trend does continue. Also keep in mind that we are starting to get into a seasonally bullish time of year. It's more towards the second half of December traditionally, but we are in December. We're going into the second week now. Holiday kind of trading lightens up. Everybody's happy and merry, and that tends to be a pretty good period or point for the markets. So keep that in mind as a backdrop, but I think these levels here are pretty clear going forward. If we go to the IWM here, once again, this one on a relative basis now is much further off of the highs, right? We made highs up here around 155. You can see we're hanging out down here at 151, and this is an important area. What we saw happen here in the IWM was a 4-day pullback and retest of this 150 breakout level. So we came in and closed right at this breakout level here on Wednesday. We popped higher Thursday, and then we made a little bit of progress, but not the best looking bar here on Friday. So the IWM could be sort of the canary here that we want to be paying attention to. This is slightly weaker. It did close the week down 1%, so a pretty good difference there. Stark contrast from the S&P 500. And I think the level here that's important is this 150 level. It was the lows from Wednesday, and it's not just because it's the lows of Wednesday, it's because it is the sort of the breakout level we emerged from at the very end of November here as we broke above this kind of 5-week topping pattern here, or tough to call it a topping pattern, but just a consolidation right here around 150. We pulled back off of that into, or basically throughout October into early November. We broke back above it. Now, if we suddenly lose this level with some authority and we start to trade back below 150, that would at least put the brakes on in the short to maybe intermediate term, depending on how you define it, if we started to get some meaningful closes and a sharp volume thrust back below 150. So it's something to pay attention to. But for now, on this test here, we have held. The market's trying to eke itself higher, and you can see the 20-period EMA here is sort of coincides with this 150 level. So I think it's an important point to watch into next week. And then, of course, the same philosophy applies here on the as it did with the S&P 500. Watch for a retest of these highs if we do get back up here. How does the market act as it retests this old sort of sellers or sort of this buyer's exhaustion point that we saw demonstrated on Monday? Finally, brings us to the Qs. So if we look at the Qs here, you can see a little bit closer, maybe of resemblance to the S&P 500. We did finish higher here on the week. That's 14 basis points higher, 21 cents in the Qs. And again, we have a very clear sort of level line in the sand to pay attention to. It's 152. You can see it's been tested a couple of times in here. And recently, this kind of sloppy trading right down around 152 did hold. And we did pop higher, again, back above the 20-period EMA and the 8-period EMA. So more in the midpoint of this range, but really we're going to be watching the same exact thing here. Can we get back up to the highs, and how do we act when we get back up, or if we get back up to the 156? Can we get back up there and retest? Do we roll over and put in a lower high? Do we roll over, put in a lower high, and then break 152 to the downside? That would be the bearish sort of short-term top scenario that I think many maybe are looking for or want to happen. I'm not sure. I know everybody sort of cheers when we start pulling back. So maybe that is, maybe that could be a scenario in the cards. If it does, I'd say that's a bearish scenario and would have an actionable maybe short with a breakdown below this 152 level. But we got to see it happen right now. The trend again on the longer term time frame here, particularly in the Qs as well, is still up and to the right. There's a lot of long-term moving averages that are still supporting this market, just moving higher here. So we really need to see some of that topping action, some of that distribution kick in here with that lower high, with an uptick in volume, with a break of support. That gets you short. That gets you at least a more meaningful short in my book. If you're more active, then certainly you can play inside this range. So that's the recap overall. Basically, shaky start to the week. We stabilized. Bulls picked us up to the end. Let's see how we act, either retesting the prior highs next week in early trading or the lows from this week. Those are your lines in the sand. So let's jump into some other markets here. TLT is next. Had a good week kind of going for it, and then it gave it all back, or gave a large kind of kickback on Thursday. It did finish slightly higher here on the day. So I'm sorry, on the week, 14 cents to the upside here in the TLT. And you can see it's struggling at a pretty important spot, this 127 level. It's very messy here, but we've topped out and found resistance in a lot of these spots going all the way back for most of this year, frankly, right around this 127 level. So it's struggling. This is a messy chart. It's a headache. I really don't want to pay too much attention to it, because it is just a lot of littered with a lot of sideways trading and overlapping price action, and there's no real trend here. So I don't really want to participate too much. I'd still say widen things out a little bit. Keep an eye on this, I'd call it, I guess, 128 now, given we failed up there, and then down around 123, 124, start to get outside of that range, and maybe things get a little more interesting. Commodities in general this week were in rough shape. Oil had a nice rebound into the end of the week here on Friday, but overall it still finished down 1.5%, but again, still off of the lows, and you can see it is finding some support at that 8-period EMA here on the weekly chart. And notice here we got maybe a bit of a bigger sort of consolidation that is morphing. We got a series of these higher lows that are potentially getting put in place, and you still have, I guess, some higher highs going, but you got this downtrend line now, and you kind of got this wedging out over here, or sort of tightening up. So it'll be interesting to see how this expands next week. Again, the longer term time frame has been up here on the intermediate term basis. So generally my default thought process is default to the trend, the dominant side of the trend, which is higher here on the intermediate term. So keep an eye on this if you're looking for a USO breakout. Keep an eye on this trend line. Keep an eye on 1160, 1165. That would probably be interesting on the downside. Pay attention to these lows here right around 1120 or so. So that's oil. If we go to natural gas next, this is in rough shape here. It's just breaking to new year-to-date lows. This weekly chart looks pretty horrible, as all the moving averages are bearishly aligned above price, racing down with some momentum. Volume's coming in now, so maybe we're starting to get to some capitulation, but we've sort of been talking about that, or thinking about the possibilities of a bottom getting put in, and it's just on the bulls to prove it. I would not want to be trying to sort of bottom fish this at this point. There's just too much damage here. So I'd say stick with the trend, which is now lower. If you got to fight it, hopefully your time frame's short and you're really active to try and scalp some pieces out of that. So, metals. So we'll go to metals next, which GLD here, you can see also in tough shape this week, 2.5% to the downside, really clearly breaking below this level, which we've talked about for quite a while. It was 120. We mentioned how it was basically the lows here since October. We came back down, retested it, bottomed out in late October, and then we sort of just grinded higher here. We had this trend line, we had the lows at 120, and we broke them all this week with some volume coming in. So GLD is an avoid or stick with the trend, which is on the downside. upside. And silver, I think, was your early warning here. Remember, silver broke down a lot earlier, going all the way back to here on Tuesday. This exit we made, so remember, we were long silver in this consolidation, looking for an upside break. Almost had it right here. Thought we could maybe get it on Friday. That never happened, and we exited the trade right here for a loss on Tuesday. And certainly in hindsight, those are one of those good losses to take, where your first loss is always the best loss. That's a good trading cliche, but it speaks certainly volumes when you're looking at a chart like this, because you can see it just really waterfalled lower and is making new lows here. So SLV, gold, natural gas, they're all just sort of in the do not touch or go to town on the short side, stick with that trend. USO is kind of bucking it and going to the upside. So some things to think about, and a little bit of volatility there for you equity traders that are looking for a little more two-way trading and downside action. So those are the major markets. Let's look at what's going on here in the sectors. So IYT first here, we've been discussing this, nothing new, but still continued with some strong progress to the upside, 2% to the upside, following up and closing above last week's highs. Good volume coming in. Last week was the big week to take notice, 6% to the upside to new highs. More follow through this week, so things are looking good here for IYT, and given Thursday and Friday's combo action there, maybe getting ready to leg higher into the end of the year. It is stretched, of course, but momentum and that light volume trading might just be able to carry this higher into sort of the finish line of 2017. XLY, nothing new here either. We've talked about this breakout that's been underway for the past several weeks. This continues higher as well, 66 basis points to the upside. Good volume coming in. Had a few day pullback here at the beginning of the week, stabilized at that 8 period, and now it's trying to continue again to the upside. And then finally, I got my notes right to the right of the screen. That's why you see me kind of veering off here. XLF financials, which have been strong as well, 1.5% to the upside this week. You can see had a nice little kind of pullback here back to the 8 period, a check back, and then we had a nice rebound into the end of the week. So financials, another strong one that I'd say to pay attention to. Energy, a lot on this bullish list here. Last week was really the week to pay attention to it, as it had 2.6% and kind of a breakout back above this $69 level. It was down this week, but if we look at this daily chart here, you can see it kind of checked back to the 69 level, undercut it just a bit, stabilized, pushed up. So I like it if it can start to, if it can continue to hold above, 68, 75, 69, the consolidation here from October. The more we can stay above there, the more constructive it looks. And IBB, which has been, really in the sort of the penalty box here. It's been either underperforming for the past month or so, or just sideways and chopping around. And it finally got its act together here late in the week. Had a 2% move on Friday, and we had a 1.5% move on Thursday. So if we zoom out here, still rather messy, but we came all the way back down to this. It did have a reverse split recently too. This is formerly $300. So now this $100 level, $101. It did, hold this, or in the process of trying to hold this. And now you can see we're closing at new 1 month highs here with this close at 106. So maybe this is a good enough bottom. It still looks a little bit sloppy to me, but there's some good action here over the past 2 days, something to pay attention to. You could also look at XBI, which might be a little bit cleaner, and you can see it's actually kind of holding up a little bit better. This is the equal weighted biotech ETF, not just catered heavily to those large caps. So this might be also interesting for you to for you to watch, and also closing at 1 month highs. So those are sort of the bullish sectors that are in good standing. If we go to the downside, there's really only two I want to look at. It's semiconductors. So SOXX, you could see even kind of an ominous looking rough candle here on Friday. It had this high volume breakdown, this expansion in range here back at the very end of November, before we got into the final trading month of the year. And you can see it's just been kind of sliding lower. It did pop higher a bit. You can see it failing and reversing at this fast 8 period blue moving average on my chart. So it kind of looks like, really if you're super nimble and you want to be a bit maybe aggressive, or you want some short exposure on this market, probably an actionable signal for you here on Friday. You could also look at ESMH. I know is a popular ETF for semiconductors. Same exact look here, failing at those highs, closing red on the day. And And XLU, utilities. We haven't talked about utilities in just in a little bit, but this is kind of an interesting look here. I don't know how much I'd read into it right now, but we did have this trend line break, and you also have what could be starting some lower lows and lower highs. So there's your lower highs, here's your low, and then here's your slightly lower low. It looks like we're already trying to break above it. I'm into the weeds here just a little bit, really nitpicking. We'd want to see this accelerate a bit lower, but something to pay attention to. Again, you got to remember the bigger chart here is still very much bullish. So this is not something I'm necessarily advocating a short for, but something to pay attention to as utilities get overlooked sometimes. Maybe pay attention to see if this starts to roll over or if this starts to go into a longer period of consolidation. For me, just an avoid, not looking to short this or really do anything with it. So that's it. That's what I had for today's video. Hopefully you guys managed this week okay. We're getting in again to the end of the year, so we should start to see things if they follow traditional patterns, start to lighten up a little bit, and activity start to slow down. So that's it. Thanks so much for watching. Hopefully you guys enjoyed. Do subscribe to our channel if you like the videos. Have a great weekend, and talk to you again on Tuesday.